If you inherited an IRA or 401k in the year 2020 or the year 2021, you may want to do some extra tax planning at the end of this year, 2022. Hi, I'm financial planner Sean Mullaney. Let's discuss. Well, what are we talking about here? We are talking about something called the 10-year rule. This came in at the end of 2019, applicable to many but not all beneficiaries who inherited retirement accounts starting in the year 2020. And a lot of folks said, okay, great. They got rid of the stretch IRA. Folks love the stretch IRA where, a young beneficiary who inherited a retirement account could take small distributions over the remainder of their hopefully long life and really manage taxable income and really get a lot more tax deferral from an inherited retirement account. And they said, well, starting in the year 2020, you're not going to be able to do that. Many, but not all beneficiaries are now going to be subject to a 10-year rule. New rule is by the end of the 10th year following the death, the beneficiary needs to empty that traditional IRA, traditional 401k, whatever the inherited account was. And it's like, okay, not great because we would have loved that stretch, but okay, just deal with it in 10 years. We'll figure it out. Okay. Well, then what happened? Then the IRS issued some interesting proposed regulations. And those proposed regulations said, a lot of you people who are subject to this 10-year rule, well, guess what? Every year you still have a required minimum distribution. Most practitioners did not believe that was the right answer and were very surprised by these proposed regulations. Like, what's going on here? We're subject to the 10-year rule. The government's going to get their cut of these traditional retirement accounts because they got to come out in 10 years after the death. So there's eventually going to be some tax paid on them. Why does the government need RMDs in addition to, not instead of, the 10-year rule? And just the way Congress wrote the rule, it seemed like, all right, if the 10-year rule applies, no RMDs, it is what it is. Now IRS comes in and sort of muddies the waters and says you're both subject to the 10-year rule and RMDs. Well, that's a little weird. But here's what happened, right? There's been some pushback on these proposed regulations. And so the IRS came out with a notice that I'm going to link to in the description below, which basically says, look, for the year 2021 and the year 2022, we're going to sort of ignore these proposed regs and we're not going to assess any penalties for the failure to take the RMD, right? So what the IRS has sort of done is they've sort of said, okay, white flag for the year 2021 and the year 2022, and then we'll sort of revisit this battle in the year 2023. So that's good news for taxpayers. But here's the thing. Even if you're now excused from that RMD, you still might want to take a year-end distribution from that inherited retirement account. Why? Because you want to manage your tax rates year over year vis-a-vis your other income and the inherited IRA, 401k, retirement account income. It may not be such a good move not to take a distribution. So yeah, maybe you're off the hook in terms of the RMD, and that's good news. It's one less thing to worry about in life. But you still might want to do affirmative year-end tax planning at the end of 2022 to affirmatively take some of the money out of that inherited retirement account to pay the tax now so the tax doesn't build up over that 10 years. And maybe at the end of the 10 years, you have to take a massive distribution and you up your marginal tax rate in year 10. That may not be such a great outcome, especially if in the year 2022, for whatever reason, you were laid off, you took a sabbatical, you otherwise have low income. This might be the year to affirmatively withdraw some money from an inherited retirement account to get that money taxed at what might be lower tax rates. Now, look, everyone's mileage is going to vary on this. Maybe 2022 was a real high income year and you're excused from a RMD. Maybe you say, oh, good news, and I'm not touching that thing until 2023. You got to do your own analysis. But I think it's interesting that even for some people who have been excused from an RMD on an inherited retirement account, still might want to take a distribution to affirmatively plan into taking income at a hopefully lower marginal tax bracket. Hope you enjoyed this video. If you did, please smash that like button and subscribe to my channel. I'll see you next time.